So in this third homework question for Chapter 7, I thought I would go over some of the common mistakes that students make to help you in completing this problem. So one thing that you need to do is for your schedule of expected cash collections here, we need to put the accounts receivable balance as of June 30th in this July cell. So we go up to our balance sheet as of June 30th, grab the 140,000 or whatever amount you have for accounts receivable, and put that amount here in the July column as the expected cash collections from accounts receivable in July. And then to fill out the rest of the schedule, you'll refer to these estimated sales figures here. And we're told in paragraph 2 that credit sales are collected 25% in the month of sale and 75% in the month following. So for July, for example, sales are 270,000. So we would put 25% of 270,000 in the July column and the July sales row, and the other 75% in the August column and the July sales row. So we would continue on doing that for the remaining month. For the merchandise purchases budget, for the budgeted cost of goods sold line, what we will do is look up here at the directions. It says cost of goods sold is 60% of sales. So we need to go back to our sales figures, multiply them by 60%, and that will be our budgeted cost of goods sold for each of the months. For the desired ending finished goods inventory, we're told that that should be 35% of the cost of next month's sales. And a common mistake is to multiply the 35% by the sales figures. But you'll notice it's 35% of the cost of next month's sales. So the ending inventory, the desired ending inventory that goes here, will be based upon 35% of the August cost of sales or cost of goods sold, this number here. And then, of course, to figure the desired ending inventory for September, we would need to calculate the cost of the October sales and then take 35% of that number. Now, when you do your totals column, make sure that you don't add across your desired ending inventory numbers, and you should also not add across your beginning inventory numbers, but rather the ending desired finished goods number for September becomes the ending for the total column, and the beginning finished goods inventory number for July becomes the beginning figure in the total column. Then for the schedule of expected cash disbursements, we'll take the amount of July purchases, whatever this bottom number is for the required purchases. 50% of that we will pay in July in cash. The other 50% we'll pay in August. And we continue on taking the dollar amount of required purchases, putting 50% in the month of purchase as being the amount of cash paid, and the other 50% in the following month. And don't forget too to grab the accounts payable balance from the June 30th balance sheet, which in this problem is $64,750, and that amount will go here in the July column as the cash disbursements in July for paying off that accounts payable balance as of June 30th. When you get ready to prepare your budgeted income statement, you'll simply add the July, August, and September sales to get your total sales. Your cost of goods sold will come from this column, the total of budgeted cost of goods sold. The difference, well, I won't tell you that because you should know that by now since we're using a traditional format income statement. But a common mistake for the selling and administrative expenses is to remove the depreciation expense, but we should include it. So, and that's in accordance with GAAP that we include depreciation expense on the income statement in our total for selling and administrative expenses. And this amount given here is a monthly amount. So since the income statement is for 3 months, we need to multiply this amount by 3. Probably the hardest part of this problem is the balance sheet. So to figure our cash, we'll take the beginning cash balance, add the total expected cash collections for the 3 months, subtract the total expected cash disbursements for the 3 months, and subtract the cash payments for selling and administrative expenses. So we'll have to be sure to remove the depreciation expense first. Our accounts receivable, we can figure that out by looking at the dollar amount of sales in September that were not collected in cash in September, and therefore would become the accounts receivable balance as of September 30th. Our next item, the amount of inventory for our balance sheet, would be the desired ending finished goods inventory as of September 30th, which we would get from this cell. And finally, our property, plant, and equipment, it's stated at net of depreciation, meaning the net amount you get when you take the cost of the plant and equipment minus the accumulated depreciation. So since our accumulated depreciation account is getting bigger by the amount of depreciation expense taken for July, August, and September, we will reduce the $270,000 by the 3 months of depreciation expense to get to our new net plant and equipment number. Our accounts payable for our balance sheet will be based upon the required purchases for September that we did not pay cash for in September. So the other half of those purchases would be in our accounts payable balance. Our common stock would just be the same amount as this amount here in the old balance sheet, because no new stock was issued and no stock was repurchased. And then finally, our ending retained earnings balance would be calculated by taking the beginning retained earnings, adding the net income from our budgeted income statement, and that would be our answer because there are no dividends that were declared during the quarter. If there were dividends, we would subtract that from retained earnings to get to our ending retained earnings balance. So finally, the last step would be to add up all of the assets, add all the liabilities and equity accounts, and the total of liabilities and stockholders' equity should equal our total assets. One final hint, if you're having trouble getting your balance sheet to balance, you may have made a mistake up here with these schedules. So you may want to use one of your checks for checking your work. After you're done preparing the schedule of cash collections, the merchandise purchases budget, and the schedule of expected cash disbursements, to make sure all of these numbers are right before you begin preparing your budgeted financial statements.